Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started. Good morning. Today is Tuesday, August 31st, 2010. This morning we're talking about a Japanese conundrum. Now, overnight, in the overnight market, the Nikkei average fell roughly 3.5% to close its lowest level in more than a year. Now, what this did is this caused some major risk aversion overnight with Japanese yen strength taking place. Now, under normal conditions, the Nikkei and the yen, they have somewhat of an inverse correlation. So if the Nikkei is up, Japanese yen down, Nikkei down, yen up. And that's generally the idea, but part of the reason that the Nikkei was down so much was because of the emergency monetary policy meeting that they called after this Jackson Hole meeting that occurred last week. And basically the market was expecting some sort of major intervention news to come out of it, and it didn't really happen. They came up with, they made a token gesture, but not enough to really think that the market was serious about them trying to weaken the yen. So what we've seen there is some yen strength to start the day. Now, I just want to show you here, we're looking at dollar yen. I just want to show you, let's go to the 2-hour chart real quick. And you can see that we're reaching back, getting back down towards those 15-year lows. We had a low this morning of 84.03, and it looks to be rebounding a little bit as the U.S. markets opened, and the stock market seems to be holding up a little bit here. It's currently negative right now, but it looks like it's on the way back to higher. We've got oil prices lower, gold is also higher. I'm catching a safe haven bid. Just want to tell you some brief news going on around the globe here. Real quick, we had overnight in Australia building approvals. They came in better than expected. Let's just look here. We can look at the 5-minute chart, and you can see that that earlier in the day, Aussie USD was lower. Now it looks like we may be getting a little bit higher. 88.5 looks to be some near-term support. So the building approvals were better in Australia. That's a good sign for their economy. All right. Some other things we want to take a look at. We're going to look at the unemployment rate in Germany. And that came in. That was also a little bit better than expected. And as you can see, the Euro USD was a little bit lower, but now this is also coming back as well. So it looks like we're going to be flipping here from risk aversion to risk taking this morning, and we'll have to see if that holds up throughout the day. In the UK, okay, we had actually mortgage approvals. They came in higher than expected, and that was seen as a good sign. But nevertheless, the pound was selling off, under risk aversion themes that we saw earlier today as well. We've got USD CAD. CAD's weaker, the loonie, because they came out with their quarterly gross domestic product figures. Came in worse than expected. They were expecting a 2.5% gain. Actually got a 2% gain. So, that is sort of weighing on the market as well. Here in the U.S., we have some figures that are coming out. Looks like we're going to get home price index. Let me see if I can get a check on that reading. But I want to get back to Japan here real quick and just talk about what's going on with the yen now. The common wisdom on the street is that, everybody wants the yen to be weaker, particularly Japan, because they're an export-driven economy, and a stronger currency hurts their exports, makes them less competitive. Well, that's the conventional wisdom. That's what they've been following, for the last 20-odd years or so. And they've been in something called the lost decade, where they've experienced major deflation over that period of time, and they haven't really been able to jumpstart their economy. But what's surprising about Japan is that, even though the economic conditions aren't that hot, and they have a very large deficit as a percentage of GDP, they have very low unemployment over there. All right, and their citizens and consumers have one of the highest savings rates around the globe. The problem is that there's no domestic demand there. So maybe a stronger yen's not such a bad thing. Maybe that's going to help encourage, some of the people there with all this savings to start spending some of that money. And if they can set up policy that encourages that, then they could force a shift in their whole economy. All right, a stronger yen, that could help actually encourage a little bit of inflation, as now you have a stronger currency chasing goods and services. And as demand picks up, now supply can pick up. Now you've got companies that are producing more. Okay, they could also do something like start outsourcing some of their manufacturing to lesser developed countries to help maintain corporate profitability. Now, that's not a great idea, generally speaking, because it's going to encourage more unemployment. All right, they could probably withstand a little bit more unemployment, with the idea being that they're going to get some domestic demand going. Now, that would probably reduce the savings rate as more unemployed people have to spend from their savings in order to get by. Okay, but this could also encourage new innovation, a new industry. All right, and with the lowest interest rates around the globe, all right, a lot of these businesses could have a competitive advantage, being able to borrow very cheap money to get started. So it's really just a deviation from the conventional wisdom that I'm talking about here. And perhaps in Japan it's time for a change, because they've had these policies in place and they clearly haven't been helping. So while this is just sort of a rough idea and it sort of goes against the conventional wisdom, I tend to be contrarian from time to time, especially for those of you who know me. This could be something that may not be seen as a bad thing. Okay, or they could just continue along with the same policies that they've had in place, and continue to try and jawbone the yen to weaker levels, and potentially intervene. But if they do try and go to the intervention route, I think they're going to be in for some trouble, because I don't think that they can go it alone. They saw what happened recently to Swiss National Bank, who attempted to keep the franc low against the euro, and they actually ended up losing a ton of money. So if that happened to Japan, then they could potentially have losses that add to their deficit, which in turn causes the yen to strengthen even further, which is directly opposite of what they're looking to do. So if they decide that they're not ready for the policy shift, maybe they're better off saying something like, a strong yen is desirable by the Japanese economy as we are shifting economic policy to encourage domestic demand and spending. Okay, so in other words, if they say the opposite of what they want, they just might get it. So if they were to say that, then you just might see the sell-off begin. So anyway, that's what I'm looking at today, folks. Keep an eye on yen strength, and see if we can flip here these risk themes from aversion to risk-taking by day's end. Good trading to all. As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.